Got a lot to cover today, so just firing up all the streams, getting everything situated here so we can get this show on the road. Good morning, good morning, good morning. All right, let's just do a quick check here, make sure everything looks good. All right, we should be solid. So we're going to get this show on the road. Quickly, just a disclaimer, be careful out there. The risk that you take on is really the capital that you're willing to lose. So just be aware of that when you're trading, when you're allocating. Be careful with size, especially in an environment like this. This is not a particularly forgiving environment. The volatility that we've experienced over the last several days has been extraordinary. In fact, yesterday the inside range on the S&P was about 8%. So even if you're on the right side of that trade, you can still get blown out. And the folks at Bookmap would love for you to join them on their Discord. They've got a lot of great educational content there. A little bit about me. I've been trading since 2005. I know that dates me a bit, but it also means I do have a wealth of experience to share. And I've been through a variety of very turbulent times in the market. It's actually exciting, but it can be a bit scary if you're not familiar with it. And there's no shame in sitting on one's hands and watching things play out rather than just trying to go real heavy into a tape like we've seen over the last several days and really the last several weeks, but it's intensified. So the big takeaway here is if you're going to trade this tape, be willing to take on smaller size because you're really going to have wider stops to not get absolutely pushed out of the market. And that means, if you're taking on those wider stops, you're taking on more risk. So that's why I believe smaller size makes more sense in this environment. Add to it, I also think it's important to be very careful about the trades we are taking on because the S&P has been trading a bit more like a penny stock. And again, if you don't have a lot of sense as to what your risk and reward is, there's not really a good opportunity to simply put on that trade, particularly with any real size. I will say going into yesterday, we were exhaustively oversold. So the kind of pop we saw, even on a fake catalyst initially, that rumor of a 90-day pause, but also through a lot of bad headlines, that may have us putting in a near-term low. I don't know if the worst is behind us quite yet. Let's quickly talk about why I watch order flow. Biggest piece is watching the differential or what we call deltas. We can see that in Bookmap using the bubbles. They're showing us buy or sell deltas. The size shows us the amount of aggression. On the bottom, you also have delta volume bars, and on the side, you have the session volume profile, which shows you deltas on a basis of price rather than just price and time, which can be helpful to get a little bit of a better sense as to where there's been aggression throughout that tape. Let's go through some charts here. NVIDIA seems to be carving out a new trend line, and this is really interesting to see. We do have the stock up pre-market today as well, as one could expect with the sort of green we're seeing pre-market. And I think this is something that we're going to want to be keeping an eye on because this has been a leadership stock in the past. So NVIDIA is likely to have some degree of impact here and just popping up some news on my end. But the big takeaway with NVIDIA is it is kind of the centerpiece of the AI narrative. So watching how it reacts and really how it takes on all of this new sort of tariff environment, the AI catalyst story coming undone to some degree. I think that's going to be pretty important going into today and for the rest of the week and really throughout Q1 earnings season because I expect there's going to be a lot of AI capex revisions downward. And what that means is a lot less demand for NVIDIA's product. So I am interested in watching how it handles this trend line. We've pushed back into the Ichimoku cloud. Yesterday, we had it below, which would have put us into a downtrend if we had closed there. But we've pulled back into the cloud. So now we're more in a neutral trend. If we're looking at this through Ichimoku, we can also see we pretty much bottomed out right at this demand area, this higher volume node. So I talked about my price target to the downside initially being about 90.81 on NVIDIA. We hit that and then some and bounced pretty powerfully back from that level yesterday, which wasn't a tremendous surprise to see that reactivity around a key level where there had to be a decision in this low volume node area as well. So we'll watch this stock going into today's tape, particularly the options and the order flow. But I think we'll see some continuation higher, probably pulling us back into this higher volume node, into the positive trading reaction we're having in this relief rally. Apple is another one to watch pretty closely here. It had pretty much a 19% decline in in a very short amount of time. I think it was about 3 trading days. And yesterday, Apple started to come off of its lows when we heard that they're going to be farming out more production to India from China. So, in a nutshell, some of what these tariffs are doing is punishing companies that are manufacturing in China and having them consider diversifying their supply chain. Now, obviously, the goal, as espoused by the administration, is to bring as much of that back to the United States as is possible. But the reality is, it's probably going to find other countries where still, even considering the tariffs, the overall cost of doing business there is cheaper than the United States or China, hence Apple's move to India. I don't think this stock is out of the woods. I think we can consolidate in this high volume node for a while. And I would like to see that rather than Apple kind of pulling over and testing this lower volume node. I think we are instead much more likely to see demand coming in around this level. And we've seen consolidation here before. That's what built this volume profile, this consolidation that we saw previously. So I think we'll kind of get back to that sideways trading in Apple for a little bit. And gold continues to hold up very well. It does look a little extended to me. We talked about 3,000 being my goal for the first half of 2025, and I've been talking about that really since August of 2024. And remember, I talked about for the summer of 2024, 2,700 being the goal, and I spoke about that quite a bit earlier in the year. So I've had some decent calls on gold. I am leery here. I don't necessarily want to be super long in gold after it's had such a big move. I'd rather see it pull back to the 21-week moving average. That would give me an opportunity to want to rebid this in this structural uptrend. And just give me 1 second. I'm hearing about some technical issues here. All right, we should be back online. I'm just going to post that real quick. All right, we should be back and up and running. I apologize for that technical interruption there, a bit of a hiccup. That being said, gold continues to hold up pretty well, but I do want to see it pull back to that 21-week EMA to feel a little bit more confident about wanting to get long the precious metal again. So that would bring us back to about 2,800 if we saw that fall happening shorter and more sharply. But at the end of the day, I think gold is still favored in this environment. I do think that it's something that remains an uncertainty hedge. But what we really have to be concerned about with gold is that when push comes to shove and there's a portfolio being liquidated, gold is going to be sold just to raise cash in a tough spot. And we saw a bit of that, especially yesterday. So just if you're getting real long gold and looking for it to head up to, say, 3,500, I would be concerned near term. I think we're due for a bit of a pullback or consolidation before we extend this move. And then we have the S&P 500. That 4,600 area is worth watching closely, in my opinion. That's the next really big low volume node. And we can see it's also an area of potential technical support, given that that was the highs from the summer of 2023. I would not be terribly surprised if we get back there before all is said and done in this whole shakeout of the global trade order. And I don't think we're out of the woods yet. I think we can get a short-term pop. We've certainly got a push to continue that today, and that's great. But that may be a better opportunity to raise some cash than say we've gotten all clear. Because what drove this unwind is still all very much in play, unfortunately. The uncertainty surrounding global trade and where ultimately these policies go, but also the knock-on impacts of what's happening in global trade. It all interrelates here. And the impacts that it's going to have on the broader economy and the markets. Short-term shock in price is likely to be something we're hearing about. Price increases coming down the pipe from companies like Micron, marking up their products starting Wednesday as a result of those new import tariffs that are being imposed, those so-called reciprocal tariffs. Those price increases are likely to be passed down the supply chain to companies and to consumers, and that's something to consider. But I think ultimately there is likely to be some further economic weakening with a backdrop of firm to rising prices as a result of all this. Now, looking at the NASDAQ 100 key support, looking at that around 16,100. That's also a large, low volume node on the tech laden index. So I would not be terribly surprised to see us get back there before we, see a larger, more meaningful bounce higher. Again, today we are looking at a very healthy pre-market. We'll see how much that holds during the day, especially with the kinds of headlines we may be getting. We have plenty of fattening on both the left and right tail in this environment. We're deep, deep, deep in negative gamma. Last checked, we were about 800 points in negative gamma. Obviously, that'll be a little bit different this morning, but it suggests you have an environment where you can have rips bought and dips sold pretty aggressively. And when we're looking at the options market, the big call wall overhead, 59.05 on SPX or 59.44 on ES. Looking at the gamma flip level at 58.90 on SPX and 59.30 on ES. Vol trigger 5,000 on SPX and 50.40 on ES. And then the put wall all the way down there at 47.50, and that's 47.90 on ES. And then today's pivots, above bullish, below bearish, ES 51.7225. You can see we're trading well above that. We gave that pivot out to Traderade members last night on the Discord. So certainly plenty of opportunities to play that in the AM session and even overnight for some good scalp longs. And NQ looking at 17,798 as the daily pivot. And finally, some exclusive deals. Get up to 40% off Bookmap visiting traderade.com/bookmap. That's traderade.com/bookmap. Or get up to 20% off Traderade visiting traderade.com and using the code Mayhem20 at checkout. And we're going to switch over to Bookmap now to look at what's going on in the pre-market. And while I do that, if y'all have any questions about charts you want to look at, about what's going on in the markets or economy or otherwise, leave them in the chat. If it's on the Bookmap Discord, be sure to tag me in, and we will get to those questions. All right. So let's dive right into the S&P 500 futures here. And I'm going to use the unfiltered view for the overnight since we have all that backfill on the heat map. I'm just going to pull that. Actually, this is pretty good. So you can see from the European Open, we had a consolidation till about 7 a.m. this morning. Just a pretty chunky move higher. A lot of aggression shown by buyers here as well. There were a few attempts by sellers to absorb this pressure, and we could see that was relatively unsuccessful. We also had a passive buy order come in, a pretty chunky one, about 962 contracts on that iceberg buy, pushing us through that next layer of offered liquidity overhead. And now we're continuing to drive higher up to 5270, where there's 518 contracts on offer. And we continue to see that pressure building. The next major pivot, and this was also something I had shared on the Discord in the overnight, 5274. Looks like we're about to hit that level. Pretty incredible moves overnight. So that's a pretty incredible move off that major pivot. And this kind of goes exactly with what I would have looked for, this sort of gap between the pivots and the volatility of this market suggests that when you climb above one of these major pivots, you can get pulled almost right into the next one in pretty short order. Today, we're talking about that happening within the course of about 2 hours and 20 minutes. 100 points on the S&P or more. Pretty incredible moves. Again, not a time to get too cute with the way one is managing risk. If you came in today ultra bearish, you got your face ripped off. And this is something that I talked about in the context of bear markets. And I do think we're likely in one. And even in pronounced downturns and corrective environments, you tend to have face ripping rallies. You get a market that's oversold and beat down. You have exhaustive forced selling, which is what we had going into tomorrow. That was forced selling overnight. There was some flush, right? That's something that I've been talking about that I've wanted to see as a real flush out. Yesterday, we saw that to some degree. We saw some capitulation, particularly in the AM. And I think that that is what allowed us to have that intraday turnaround, even on bad news. You know, you get everyone kind of out of the market. You get people aggressively shorting it. You get all this activity and puts building at lower strikes. All of that sets up for a pretty violent reversal. Again, it doesn't mean that the lows are necessarily in for this downward move. It's been pretty violent to the downside, so you have to expect some counter trend rips. But this is also why risk management in this environment is so important. You can't get too heavy on either side because things can move very quickly and quite violently. And I think that we're going to have a pretty interesting session here. Markets open in just about 8 minutes. Not a very macro heavy day, really, not a lot of data coming out. You've got some EIA data at 12 p.m. You've got a White House press briefing at 1 p.m. and a 3-year Treasury note auction at 1 p.m. That'll probably be interesting. You got the Fed's daily speaking at 2 p.m. and then executive orders being signed on energy at 3 p.m. Then Trump will be attending a dinner in D.C. tentatively at 5 p.m. and speaking at that same dinner around 6:45 p.m. Eastern. So we do have some event volatility catalysts. It's mostly the Treasury auction and the press briefing, maybe to some degree the executive order if comments are given there. And in this environment, I am looking for long-term investment opportunities as we shake out. So I still think that the lows are not necessarily in because we still have so much more to negotiate, to process. The amount of progress that's been made so far in the tariff talks is pretty limited. But as this whole process shakes out, I do think there'll be some really excellent long-term opportunities to invest in. Now let's look around some of the other parts of the market here as we get ready for the opening bell. Apple in its pre-market session catching a bid with the rest of the market as to be expected. Trading 187.32. It was down close to 4% yesterday at the close, even with that recovery off the lows, but it's set to push back up about 3.21% here, given what we're seeing in pre-market. So seeing some strength in these techs. Amazon pre-market here set to open up about 5% higher. So pretty strong pre-market rally in that name. Looking at Google here, or Alphabet, I don't know that anyone actually calls it that. It closed up yesterday about 0.75%, and this morning set to open about 3% higher. So we could see that strength in the bid on Alphabet. Meta also catching a pretty good bid this morning, set to open up about 5.5% higher. And let's make sure we have the view of outside liquidity here, just because we'll see some of those balance numbers once we get into the live trading session. We've got Microsoft. Microsoft is also trading higher this morning by about 3.25% with a pretty buoyant pre-market session starting at about 7 a.m. And this morning at 7 a.m., we had a lot of headlines from Treasury Secretary Bessent talking about making progress on tariff negotiations, in essence, providing some positivity to this market that's needed some positivity, really. And everyone's favorite high beta trading vehicle, MicroStrategy, up about 4.25% this morning. Pretty decent pre-market moves on this one as well. NVIDIA up about 6.42% this morning to 103.99. And we could see there's some pretty large offers starting to form overhead. We'll see what that looks like in about 3 minutes when the market opens. And then finally, we've got Tesla, the wild card, also bid up this morning about 5%. And gold looking very interesting this morning. Bid up about 2% and getting into an area of pretty large offers overhead. There's about a delta of 400 between the offers and the bids on gold. So getting a little offer heavy on the order book here. We'll be watching gold as well today. And then crude, which absolutely got destroyed over the last several days, getting bid up a bit today. Should be good for some of the energy stocks, just like gold being bid should be good for some of these gold miners as well. And I had a question, what extent does Gamma exert power in extended trading hours or Globex timeframes versus regular trading hours? It's still there. It's not quite as pronounced, but it is still a factor. And especially after the European Open, where you start to see more dealer participation and hedging activities. So, great question from Twice Live. And RS says, "Good morning. Thank you for streaming. You're welcome, RS." And he goes on to say, "LOL, S&P trading like a penny stock. 100% it is. I mean, I was even saying that yesterday. Like, what's the point of trading penny stocks when the whole market trades like one, right? That's pretty much where we are now. And we are now tagging that overhead major pivot that I was talking about in last night's market note. So we pushed above that initial pivot and made a pretty powerful move higher. That initial pivot was 51.7325. And you can see once we made a pretty big break above there and built acceptance, it was off to the races to 52.7375 in no time. So these pivot levels, these major pivots are based off of transactional activity and price action to determine where there are bigger decision points in the market. And so that's why they become actionable. Instead of having to go through and spend hours looking at charts and volume and otherwise, this programmatically discerns where those actionable levels are across multiple time frames. The intraday pivots and then the major pivots. And right now, because we're in such a volatile environment, the major pivots have become that much more actionable. Got another bit of feedback coming in. I'm just going to share. Ship says, "Teacher, how did you get so smart about the entire market? It's like you always know the right thing to say." Well, that is an incredibly kind thing to say. I don't know that I always have the right thing to say, but I at least try to offer my point of view, and where I think things may be going, what I think could be the catalyst for that. I try to look at a lot of different data points, but Ships, this is 20 years of experience and a curiosity that is insatiable. I love learning and I really enjoy digging into this stuff. So for me, it's all a pleasure. And we are now open with the S&P futures implying a 3% open, Nasdaq 3%, Russell 3%, everything very well bid into today's session so far, right into this pivot. We'll see where we go from here. Often when we get overnight bids this strong, we don't get too much continuation, but we're in a different market now. We're in a different regime now. And it's one where basically one man decides what the market's going to do at any given moment. So S&P futures implied that open 3.5%. We are opening up 3.5% on S&P and Nasdaq. Russell up about 3.33%. Dow Jones about 3.5%. VIX coming down by about 10% here. Spot level of 29.96. And we are seeing some pressure off that pivot. That is a pretty important level to watch. If we break above it, we could get some continuation. But right now, we're rejecting lower from it. So to reiterate, that is the 5273.75 pivot on the June S&P 500 futures contract. And we are seeing a pretty noteworthy rejection lower from that pivot. So that is something that is worth noting here. We're about to hit that next pivot. Next intraday pivot levels 52.54. These are all on our Discord, programmatically generated. They are based on price action and transactional activity for two different time frames, intraday and then day to day. So it's going to help us sort of map out where there are key important levels. You can see we bounced right off that intraday pivot at 52.54, right back up. Looks like we may want to test that major pivot again from below. You also note point of control showing some convergence with that major pivot now after all the buying activity pre-market. There are some aggressive sell deltas up there, also worth noting, that are developing in this price action. Getting some oil related news, oil platforms in Mexico shuttering due to bad weather. Also hearing South Korea will not follow China in fighting back against tariffs imposed by the United States. Let's take a look at the NASDAQ, see how it is trading comparatively speaking here. Seems to be trading better than the S&P, whereas the S&P is struggling a bit. The NASDAQ looks like it's trying to push towards new session highs, just having made one. And all of that supply overhead also seems to be somewhat discouraging buyers. There's just a lot of offers building overhead. It's not quite a death cloud, but it seems to be enough to sort of discourage buying here. Another thing worth noting, this is still a super duper illiquid book. My goodness. The S&P 500 futures order book is only about 19 to 20,000. That is so low. And I would consider this a pretty meaningful rejection off that upper pivot we talked about. That 52.74.50. Now we are pushing below that next pivot level, the 52.54, and getting into a gamma level that could be kind of important at key 2 negative. That is the second largest level of net negative put positioning on the S&P chain. It may end up offering us a bit of support. That was where there was a lot of call interest yesterday as well. But remember, we talked about this even before the market opened, that there is some chance we could reject off that pivot because these pre-market moves, when they're this large, they don't often just lead to immediate continuation. Typically, you need some digestion, some consolidation, exploring some of this price action before you can make that continuation. So I got a question: were there any catalysts or economic data events this morning? It was really just Besant talking about progress being made in the negotiations that led to the big move higher pre-market. That market optimism, it needs to find something to hang its hat on to continue buying. That's what really sparked that. And when you're in such an oversold environment, it does not take much news to move the market in a big way, particularly when it's so illiquid and so deep in negative gamma. But we are giving back some of that pre-market move here. Noteworthy though, not a lot of volume on that downward move so far. And we are seeing just a little bit of consolidation here after that big move lower, but I think it's going to be a very choppy trading session. The lack of liquidity, how deep we are in negative gamma, and the amount of movement we saw pre-market on pretty weak structure just suggests that a lot of that could be retraced, consolidated, and then perhaps we find another reason to start making a bigger move, potentially higher. Let's take a look at some of the large stocks out there, these mega cap stocks. We've got Apple on screen. Pretty big overhead delta on Apple in terms of bid versus offer, about 1.4 million shares in excess of the bid on offer overhead. So some pretty chunky supply. And Apple coming off its highs. Amazon, that was a pretty violent move there off the open, and now we're giving that back and then some. Amazon trading down to new lows in the session. And again, pretty big delta on the offer side, a bit heavy, 655,000 shares more on offer than on bid. Alphabet holding up maybe a little bit better than its peers, but still giving back some of this move and not quite as much of a delta overhead, just about 148,000 for 1.2 million on offer versus 1 million on bid. Meta hanging tough overall, just sort of consolidating those pre-market moves, and about 148,000 shares more on offer than on bid for Meta. You can see there's some pretty big offers just overhead as well. And Microsoft consolidating here as well. Pretty decent sized offer at about 370, 13,000 shares on offer, and a delta of about 918,000 on offer versus bid. So again, supply heavy on the order book of Microsoft. And MicroStrategy actually looking like it's pretty offer heavy as well. 687,000 shares on offer in excess of that bid. Pretty aggressive sell delta in the session volume profile, just around 278. And NVIDIA, wow, look at that heat map. Just so much liquidity on this thing, but it's very offer heavy again. 17,000 or 17 million, I should say. Wow, in excess of the bid. So 11 million on bid, 29 million on offer for NVIDIA. And you can see there's just some pretty enormous amounts of liquidity, particularly overhead. That 105 offer, 400,000 on offer, the 120 offer, 622,000 on offer. And then below, 90 got about 546,000 shares on bid, and 85 about 719,000 shares on bid. And then we have Tesla here. Tesla seems like it is also struggling after the open. So like the rest of tech, just not a lot of follow through or conviction after that big pre-market move. And we also see this as a somewhat offer heavy book. So let's get back to the S&P. S&P starting to find some support around key negative or key 2 negative here. So that was a level we had talked about where we were looking for a potential bit of interest to come in, and we can see that coming in just around key 2. So let's watch there. We also have some pretty aggressive sell deltas here on the session volume profile. If we pushed meaningfully above them and built some acceptance, that would put those sellers off sides and give us some room for upward continuation. Because basically at that point, you've got sellers that are going to become determined buyers the further away they get from wherever they may have entered their shorts. We do see just a little bit of passive selling, this subchart iceberg indicator showing us that there are some bigger parties layering in sell orders into some of this strength. And BQ says, I thought all those auto quoters would step in to provide liquidity for the S&P book. I'll tell you, in an environment like this where there's a lot more uncertainty and we're deeper into negative gamma, you get a lot less dealer participation in the book. And the biggest amount of liquidity for the S&P 500 futures comes from SPX options dealers. And options flows yesterday were also pretty darn subdued. Usually you get, 6 digits somewhere on the chain in terms of volume. Yesterday, we did not see that. So that's another element that kind of adds into what we're seeing. That is to say, there's about 1.2 trillion of notional that trades across the S&P 500 options chain every day. About 58% of that is 0 DTE. About 75 to 80% of it, including the 0 DTE, is expiring in about a week or less. So lots of near-term options activity. All of that whole chain activity is the largest source of where there's participation in the futures. What do I mean? Dealers are hedging out their deltas in SPX largely using ES. So the volume profile that you see in ES is largely a shadow of where there are dealer hedging patterns happening. If you're selling calls in the S&P as a dealer to hedge your delta, you then have to go in and buy exposure. Or if you're selling puts, you then have to sell exposure to net out your delta so that you're able to A, pay out those contracts, but B, also be risk neutral in the market. But if there's less people transacting in options, there's less volume, there's less liquidity in the order book. That's another thing we're seeing. Because options are such a big part of this market. A lot of the other participants in futures have sort of stepped aside or shrunk their participation. And so I think that's another thing. We have seen a pretty big regime shift away from futures and into options, but you don't necessarily appreciate just how big of a shift it is because those market makers are hedging those deltas in the futures market for the most part. So in essence, you've really got to watch the tail that wags the dog. It is S&P futures. It is the most important equity discovery mechanism, price setting mechanism in the world. If you look at S&P futures, in contrast, it's about 300 to 400 billion of notional trading hands every day. So it pales in comparison, and a lot of that is a shadow of the market makers. The vast majority of volume in S&P futures and in a lot of the optionable stocks are market makers. So you've got to kind of look at it through that lens, right? It really is options leading us up and down and sideways. To discount that is to basically live in Plato's cave. And if you're not familiar with what that means, look it up. Ship says, teacher, can you explain just a little bit more about when you say on bid when looking at that book map? Would that indicate the market would want to go to these levels? So when I'm saying on bid, I'm talking about where there's interest. So if we look at the market as a three-way auction, we're talking about demand, neutral, or supply in terms of where there's a catalyst for movement. If there's an excess of demand, you've got prices that want to move higher. If there's an excess of supply, you've got prices that want to move lower. And if there's kind of an evenly matched distribution of participation, you've got more room for consolidation or chop. So when I say there's folks on bid, we're looking at the order book and we're saying, there's a big level. And let's see if we can find an example of that. So here's Alphabet, right? And you've got 55,000 shares on bid at 148. So what that tells you is that's a level to watch because there are really several outcomes that can play out. But one of the most important ones is how do we react right as we get to that price? Do we reject away? If we reject away, what does that tell you? It tells you that sellers didn't have enough supply to take out that bid. If we get right through it and continue moving lower, that tells you sellers have plenty of supply and they're willing to continue pushing lower. If we get through it and we can't push lower and it just starts chopping sideways, then it may tell you sellers have exhausted some of that supply and now we're going to consolidate. So there's sort of three ways you can react once you get to one of those big demand or supply zones on the book. Let me know if that helps, Ships. And folks, if anyone else has any questions, please let me know. We're going to be wrapping this up in just about 11 minutes here. I'm going to get back to the S&P futures. We're going to talk about that, what we're seeing there. And again, it is just a choppy trading session here. There's not a lot of decisiveness after the opening bell. We're just consolidating, kind of ranging within some of that pre-market action that we had that pulled that point of control higher, but also left us without a lot of price discovery to do higher in the regular trading session, which means it's more likely we retrace some of that lower, consolidate before we try to build for that resolution to the upside, in my view. Let's also see what the options market is telling us. We've got more interest in calls here on the chain. This is the SPX options visualizer. You can learn more about it by visiting traderade.com/SPX. This maps out all the flow that's happening in SPX options and shows it within ES, within the S&P 500 futures, converting it to those levels and updating in near time. So you can see so far, the most active call strike is exceeding the two most active put strikes. Almost. It's almost there, right? And now it is. Now we've got about 1,000. It's about a 2-to-1. So there is more interest in higher prices here based on the S&P options chain. Let's keep track of that flow today. We'll be watching it on the Discord. It updates on our streams and also on our visualizations like the flow channel that posts updates every minute as they happen during regular trading hours. But so far, you can see there is more interest in calls quite a bit higher than current price. So we'll see how that develops. The early flows are not necessarily something to hang one's hat on. I do want to see some more volume build up there before we can really talk about what that means. But we can also see that as the SPX options visualizer has run its first update of the regular trading hours session for the entire gamma chain, that now we have a put wall level just around where price is bottoming out. That's a pretty powerful level around 5,200 on the S&P, where there is a lot of put interest that may provide us some support during today's regular trading hours session. Thank you, Dan. Yeah, I agree. I think that the Plato's Cave thing is so important when we're talking about options versus futures, because I know there's a lot of folks, old school folks, that just focus on futures, and that's fine. And if that works for you, great. But I also think that as traders, it's good for us to consider all the input sources for price discovery. And it is, without a doubt, options are the biggest catalyst for price discovery in the S&P 500 and a lot of these optionable popular stocks like NVIDIA, Tesla, and otherwise. And Limp49 giving some feedback here, saying solid. Thank you. Thank you so much. Appreciate that. And Jorge says, what do you think about the 400 ES points up and down movement? Yeah, it's pretty incredible stuff that we're seeing. This is an extraordinarily volatile trading environment. And I think it's not time for people to try to be a hero or, try to go out there and leverage up, because I think this thing can move that way in either direction at any time. We have such such low levels of liquidity in the book. We're deep in negative gamma. You've got a market that's very anxious. It's looking for reasons to be hopeful, but it's also parsing the tea leaves for any risks. So it all depends on the headlines. Yesterday, we had a headline that turned out to be somewhat fake from CNBC, where one of Trump's advisors was allegedly saying they were looking at a 90-day pause except for China. That led to an immediate, I think it was like a 300-point rip on S&P. And it was like a single candle where most of that happened, single 5-minute candle. It was incredible. Anyone that was on the wrong side of that trade got violently blown out. And even if you were able to hold a short through that, you're still underwater if you were trying to short into the hole that morning. That's why I say it's not a good market to get cute. It's a good market to be very agile, very discerning about what kind of trades you want to take on, using smaller size because you have to widen your stops to account for these risk dynamics. So I think those 400-point swings, unfortunately, could be something that we see more of in this less liquid negative gamma environment until we get some more certainty from this administration on trade, on policy, where these negotiations are going, and hopefully a big reduction in tariffs across the board, both for countries we export to and countries we import from. That would be sooner than later a very good thing to see. If we don't see that, the longer this drags on, the worse it can get. And remember, those reciprocal tariffs kick in tomorrow. And we're already seeing companies starting to remark about how that may affect how they price products for their customers. Now, right now, we see S&P futures testing the point of control from below here. That also is getting us right back close to that major pivot level we talked about earlier. That's around 52.74. If we can make a big push above 52.74, I think we have room to continue this move. And we can see for now, the amount of interest in calls is still exceeding that of puts by about 2 to 1. So lots of bullishness in the options flow so far. And folks, if you're interested in learning more about what I do, visit Traderade.com. If you'd like to pick up a copy of Bookmap for up to 40% off, check out Traderade.com/bookmap. And if you'd like to learn more about this SPX options visualizer, visit Traderade.com/SPX. And if you have any questions about anything on the stream or otherwise, you're always welcome to reach out. You can email me, mayhem@traderade.com. But so far, I'll just give you my outlook before we cap off the stream. We need to push above some of this offer liquidity, particularly this point of control confluence area with this 450 or so offer just overhead. It looks like we're about to do that now. Yeah, we're starting to absorb that seller here, it looks like. So I would like to see that push above that point of control, get some of these sellers more and more offsides with their aggressive offers on the session volume profile. And then I think we have room to continue higher and probably start pushing into where these prevailing flows are happening in SPX options. Day in and day out, we see these flows act as almost a carrot leading the market around. You've got the carrot and the stick. The carrot tends to work a lot better, and it's that liquidity dynamic that pulls price like a magnet. I think it's time to make a shopping list. I don't think the valuations of the Mag 7 are cheap. I think they seem cheap because we've seen a discount versus where we were, but then we have to ask ourselves, what is the narrative? The whole narrative that got us into this period was AI and extreme growth moving forward. But if we look at those valuations now and we consider that, for Amazon, for example, a lot of the products they import are from China are going to be hit by these tariffs. And then their cloud big catalyst there was folks are going to spend more on AI and leasing out GPUs and so forth. But then if we contrast that with what's happened in the first quarter, with the increased efficiency of inference, a software stack that takes 90 to 95% less resources, by using more efficient models, by using techniques like K&V caching, flash attention, speculative decoding, and otherwise, we've been able to significantly increase what we can do on existing hardware, which means that in the future, you're likely to need less GPUs to do the same or more with AI. And if we've already had an efficiency increase of 10 to 20 fold, that tells you that AI CapEx narrative and then the overall AI cloud demand narrative is a bit underwhelming now. Add to it the increasing chances of a potential recession. Businesses are going to pull back spend on projects where they don't see ROI in the near future. AI is one of them. So I think that, NVIDIA's story is challenged here, unfortunately, because that AI CapEx narrative, the big cloud companies buying all these GPUs, I think we'll see some big downward revisions in those estimates in earnings season. That's starting this Friday, right, with the big banks. I also think that, the efficiency narrative is one that we have to pay attention to, as is the specialized semiconductor narrative, where we're going to have chips that are made specifically for inference and training that are far cheaper and more efficient than NVIDIA's GPUs. So what does this all mean for Amazon, Microsoft, Google, Meta, and NVIDIA? I think it means that they're still pretty expensive here because the primary narrative that drove them higher has been upended by some of these changes. So I would personally, I think it's time to make a shopping list. I think it's time to look at some long-term charts, weeklies and monthlies, and also learn more about these companies and what's going to drive them. My own take here is I think it's actually going to be some of the older economy stocks that are able to outperform former market leadership in this environment. And we are seeing that push, by the way, above 5274. We've pushed above the point of control. We're seeing some passive buyers starting to come into the S&P. We also see some folks that were on the wrong side of this getting stopped out. 308 contracts stopped out there. So we are starting to see that move that I talked about just a little earlier to tell us we have more room to the upside. It's playing out now, and it's starting to look pretty constructive. So that's going to cap it for me, folks. I appreciate everyone tuning into this week's episode of Back to the Futures with me, Markets and Mayhem. I'll be back next week at 9 a.m., same place. Catch me then. And, of course, if you have any questions in the interim, don't hesitate to reach out. You can always email me, mayhem@traderade.com, and learn more about my work. Visit traderade.com and consider picking up a copy of Bookmap if you haven't and you enjoy it and you think it can help your trading. You can get up to 40% off visiting traderade.com/bookmap. To learn more about the SPX options visualizer, you can hit up traderade.com/SPX. And again, for 20% off Traderade, use the code Mayhem20 at checkout. Thank you, everyone. I appreciate you all very much. I'll catch you soon.